current value has to be used when we're calculating returns on investment. And the biggest sin against money that I've ever seen in my life is people using historical purchase prices to calculate current ROIs. They say, oh yeah, it's renting for $1,000 a month. That's great because I bought it for $70,000. It's amazing. That sounds good until you realize that it's a $2 million asset that's only renting for $1,000 a month. I can tell you right now, $12,000 off a $2 million asset before expenses. Let's say your expense ratio is 50%, so you're in $500 a month, $6,000 a year on an asset that's worth $2 million, $6,000 a year. I've seen it. It's just a disaster. So people always forget that it's got a current value, all right? That current value has to be used when we're calculating returns on investment. Unless we're just saying, hey, I'm gonna leave this to my kids. I don't care if I'm making any money, which I don't know anyone who feels that way, really. I know one or two people. So you've got to be using current values. If it's worth $2 million, if you could sell it tomorrow for $2 million, you've got to calculate that $2 million as your asset value when you're calculating your ROI.
I forgot to introduce myself. My name is Jeremy Watson. Over the past 25 years, I've started 30 companies. Currently, I am running 7. I've spent 10 years adjacent to financial advice. In that time, I was consulting full-time on about $300 million. I'm going to share as much good knowledge as I can for free, hopefully to do some good in the world while sharing some interesting stuff.
This is a question that I ran into a lot in my decade as a financial advisor. People would have a portfolio, they'd have $5, $10 million of real estate, and they would say every time, without fail, oh, our real estate's great, we don't really need to look at that. I found out what that really meant was we don't pay attention to our real estate. Because as soon as we started digging into their ROIs and what was actually happening with their real estate, I saw 90% of the real estate, which probably added up to $200 million of assets over a decade of giving financial advice, was earning less than 2%. Just so you know, you can get more than that in a CD at the bank, and you don't have to change toilets or deal with tenants. So the truth is, your investment might not be doing very well, but most people who have small portfolios, who consider their real estate kind of a part-time job, who do it after the day of being a dentist or after the day of doing their marketing gig or whatever. Most people who think of their real estate as a part-time job just lose track of the real estate over time. And as long as it's paying the bills, they don't realize what it's making. And as long as it's appreciating, they just stop thinking about it. But the truth is, there's a lot more that should be done with rental real estate to make sure that you're making the best return possible. Let's give you up 6 or 7 things that you need to do. Number 1, you've got to run an ROI calc. Call us at Bedrock. We'll happily run an ROI calc. We'll ask you 7 questions. As long as you've got a loose handle on your horses, we'll be able to tell you within 2 minutes what your rough ROI does on your property. You've got to take your rent, you got to subtract out your taxes, management expenses, maintenance expenses, you got to subtract out your reserves, your insurance, your mortgage, any accounting expenses, any miscellaneous expenses. One of the beautiful things about single family residential real estate is it's not that complicated. There's like 9 line items at most that you have to deal with. You've got to make sure you're making reserves, you've got to have CapEx, you've got to factor in for vacancies and repairs. But as soon as you do that, and those numbers are all pretty easy to gauge, and we can always change the gauges a little bit based on how old your property is, how long you've had it, what your historical expenses have been. We can do those pretty quickly, but just a quick conversation with us will let you know, hey, it's earning 1%. If it's earning 1%, we're gonna 1031 that bad boy. All right, we're gonna take that $1,000 a month that you're getting and turn that into $6,000 a month. Because there are places in the country right now as we speak where I'm buying properties every single day that are earning between 5 to 7% cash on cash and appreciating between 5 to 10% per year. So the truth is, you gotta look at what your property is actually doing. Most people just haven't taken the time to develop a rubric for calculating their ROIs. And the biggest sin against money that I've ever seen in my life is people using historical purchase prices to calculate current ROIs. They say, oh yeah, it's renting for $1,000 a month. That's great because I bought it for $70,000. It's amazing. That sounds good until you realize that it's a $2 million asset that's only renting for $1,000 a month. I can tell you right now, $12,000 off a $2 million asset before expenses. Let's say your expense ratio is 50%, so you're in $500 a month, $6,000 a year on an asset that's worth $2 million, $6,000 a year. I've seen it. It's just a disaster. So people always forget that it's got a current value, all right? That current value has to be used when we're calculating returns on investment. Unless we're just saying, hey, I'm gonna leave this to my kids. I don't care if I'm making any money, which I don't know anyone who feels that way, really. I know 1 or 2 people. So you've got to be using current values. If it's worth $2 million, if you could sell it tomorrow for $2 million, you've got to calculate that $2 million as your asset value when you're calculating your ROI. If you're saying, I can't sell the property because I get smacked with an expense, you wouldn't, okay? You won't get a smack with taxes. You can do a 1031 exchange. If you don't know how to to do a 1031 exchange? I do. All right, my team has done thousands of them. They're not even that complicated. There were like 4 things you got to keep in mind. You got to identify a property within 45 days. You got to close on the property within 180 days. Really not that complicated. So we can absolutely get around the tax liability if that's your primary concern. And a lot of people never sell these garbage, low cash flow assets because they're concerned about the tax liability. 1031 exchange is a gorgeous thing. It's been used hundreds of millions of times, maybe hundreds of thousands of times, but it's a gorgeous thing. It's easy to use. Why hold on to an asset that's earning you 1%? That's a hassle. That's old. That's got deferred maintenance. To earn 0.5%, that just doesn't make any sense. Bedrock can absolutely help with that. The last thing you want to do to make sure you're earning the best return is compare it to other places in the country. Just because you happened to buy in San Francisco doesn't mean that San Francisco is the holy grail of investment real estate. Just because you happened to buy in Seattle doesn't mean it's the only place you could possibly invest in investment real estate. The truth is, there's other places in the country that we have to be looking at actively to see if we're getting a competitive return. Unfortunately, as soon as you do those comparisons, you're going to get real frustrated. If you're watching this video, we're reaching out to you because we know the returns in your market are garbage. We know that if you call our company, we're going to double, triple, quadruple, quintuple your cash on cash return, because that's how we make our money. We didn't do 4,000 houses on accident, because we know it's going to be a little bit uncomfortable to have that conversation. Call us anyways. At least know where you stand. We can usually double, triple, quadruple your cash flow coming in per month, which is usually what people who own real estate for a long time want. They want higher cash flow. They're done playing the appreciation game. So with that being the case, compared to other places in the country, run an honest to goodness current ROI calculation. Give us a call. We're happy to help with all that. We'll do that for free. You'll probably love chatting with us because we know a ton about estate. We love doing it.
If you're enjoying this content, following around while we rehab 6 or 7 houses, right? The Airbnbs that we're running, that we're trying to get information up on the channel, the 21 car Turo fleet out in Charleston, the bandage company we just bought, and Bedrock, helping people buy houses all over the country, managing 100, 150 houses all over the Southeast, 9 states, 13 property managers.
The next video you may enjoy the most is actually a video I just recorded called Never Buy Rentals Here. Basically what I did was I walked people through the entire US and picked random spots in Zillow and walked through how to calculate what makes a profitable rental and not at the highest level. What is a basic number that we can all get to establish, is it a good deal or isn't it a good deal? Is it even worth considering? If you're looking at your rentals and actually thinking, hey, is this actually a good deal? That's the one I would watch next. And just watch through how we think about calculating profitability. I think you'll love that video. We'll put that right here. Hope you enjoy.